Welcome, everybody. It's the Market Sniper. Another day, another big stats. Big stats from yesterday. Revision. A revision, you say. 9/11. Call 911 for controlled demolitions are us. We need 1,000 of those. That would be 911,000 coming right up for you here on the Market Sniper. Don't forget to like and tell us where you're checking in from while we take in the statistics and that which was released yesterday. Oh boy, oh boy, oh boy, oh boy. And here's the interesting thing. I need to do this and try to be more egoless, to be more chill, because the things we say are being suddenly coming back. When you hit a recession under Granny Yoda Yellen, Boba Yellen, who said not a recession, cause red hot, very strong employment numbers. Jay Powell, no, we've got to keep everything high and mighty on the rate side. Red hot labor market, red hot labor market, hiring DEI consultants for Boeing, hiring DEI consultants that can release 14 times arrested criminals so that they can do a little bit of blondie, blue eyes, ritualized train slaughter. Yay. Or maybe not. Yes, that's what you're facing. You are facing an absolute lie. And in our everyday updates on the bike, on the scooter, on everything else, we said you met the criteria of a recession and that it was a recession. We understand recessions from here. We see it. We get it. We have our finger on the pulse of the American, even when we're not in America. We said it was a recession. We told you the grand lie of recruitment was a fraud. And of course, the demon rats, as they like to be called, that were in power during that time, were hiring government employees or giving contracts to corporations that specifically had government exclusively as a client. The private sector was already weakening back then. It was a lie. We said to you, it was a lie back then, 22, when it happened. And we warned that you are in weak and it will continue to get weak, but they will ignore it. They were late, remember, to the inflation. They gave you the word transitory. Now they're going to show you how vigilant they are on inflation by keeping the head under the water for far longer than you can normally hold your breath. Remember that analogy? How many times you heard me say it? They're going to waterboard you, but in a nasty way, not upsy downsy, as in downsy. Let's see about that 3-minute commercial I'm watching while you downsy and breathe water with the fishies before a quick little pull up for a suck on the oxygen and back down again. We warned you that was what was happening, and now you have 911,000 jobs. Interesting numbers and numerology in the way that they lie to you, And I can say to you, at the same time, you have had cost of living increases. That's right, cost of living increases at a very high rate, it must be said. In fact, we want to highlight a couple of things, and we're going to go over to the Twitter feed and show you a couple of those very things. First of all, we feel a bit Cassandra, but then again, we're not part of the mainstream media, YouTube influencer crowd. So if we go and see nobody, so what essentially our hypothesis has been is you're stagflating in an extreme way. You are actually facing a far worse economic environment than they've been telling you. And you've been in it for a while. That we've been saying for an extended period. Now they've suddenly turned on a little bit of truth factor and done those stats revisions. Have you noticed how the last two non-farms, suddenly it became a thing? And then Trump was firing the stats person. Suddenly big numbers. You had a non-farm payrolls, which you could have done with us just the Friday gone by, come in at 22 on a 75 forecast. That's after a miss on the previous one. Suddenly they decided to say, We need rates down. We need rates down a little bit, lots of debt to roll. However, the problem is there's not that same volume of people that want to buy it, which was why rates didn't go down on those multiple pivots of any great meaning at any great level or on any major way. You went up, you went up, and you went up. And actually right now, you have gone from 0.39, and we will give you the 10-year right now as we update you from Sniper Central. So stagflation is in essence a situation where you are facing very hard levels of economic growth, often flat, in a hyperstagflation way, even contracting. But because of the inflation, which is the cost of price living, number can still go up, but be a very hard economic environment, and cost of living going up, up, up. And your actual disposable income may in nominal terms be climbing, but your living standard is going down and it's getting harder to come out. That is the environment we've been describing for an extended period. Cost of living up, growth prospects low, salary increase prospects low, although there's a little bit of inflation in that. That's where we've been. Now, let's go show you some other people's takes, and we'll also look at some charts. So here we go. Let's share that. And this is kind of where we feel a little bit ignored, a little bit of a chip on our shoulder. No, it doesn't matter. We don't serve investment banks. We don't serve big client bases with PR like CNN, with analysts writing research. We just tell you ourselves from our own research what in fact we're seeing. And here you have Adam Taggart, hard-hitting words from someone also called Hunt, Lacey Hunt, who's got a towering reputation. The repeatedly and loudly proclaimed resiliency in the labor markets was wrong. So let's get this clear. Something we've been saying for 3 years. These are now controversial thought leaders are changing their opinion in the last 5 minutes to say what we've always been saying, that the labor market is not strong. The very lie, we called it an outright lie, and they will lie to you in your face. The rest accepted that it wasn't a recession. This goes back an extended period. Extremely erroneous data. How about they damn well set out to fucking lie to you, because that's what they do. Let's talk street for a minute. Of course, you see, that kind of chatter doesn't see me ushered into the three-piece suit-tied ballrooms and directorial suites that maybe Lacey and some others get to. But we know BS long before any of these people tell you. We know BS, and we call it 3 years ago, and consistently. You are in a contracting market already. And everybody is only suddenly, controversially, now that there's been 2 weak non-farm rolls, farm payrolls, and 3 revisions. Let's get it crazy. We've been ongoing revisions. We've been in an environment of ongoing revisions, and now we had the big one that reaches back a long, long time ago. Wage and salary compensation, total personal income, private saving, etc., etc., etc. Since the preliminary data of all these indicators use the monthly payroll jobs that we have called the fake number. We've called it fake number day because of the great lie that they will tell you that we said before the recent post by Lacey, as he controversially considers his new view as a thought leader and gets out in front of the narrative. Oh, he's probably a lovely guy. That's not a pick on him, by the way. But let's just be frank. We've been squatting here for 3 years, mate. If it's first come, first serve, we own the goddamn territory. Okay? You're a Johnny come lately, all of you. Today's revisions provide strong additional evidence that monetary policy is inauditably restrictive. So you see what's actually happening now is they're going to control the narrative away from inflation and make it all recession and disinflation. But that's also the next deception. And this is where our friend Gigi comes in. Gigi, let's talk Gigi. Gigi says, stagflation, take the L. So that means those who put forward the notion of stagflation, or especially me at hyperstagflation, are very, very wrong. Joking aside, I've said many times, George teaches us and warns us for not listening and hanging on his every word and not understanding his detail. A decelerating labor market and accelerating inflation over a long time frame is not a thing. Well, actually, George, it is. It's called stagflation. It is stagflation, and it is a thing because you've actually been decelerating since we said it was decelerating, that it's suddenly become cool and everybody wants to pitch their tent by us. And at that same time, you were also fighting inflation in 23, 24, and into the beginning of this year. Right now, to 9 months in, we've been fighting inflation, holding it high. The Fed's been telling you, holding back the inflationary tiger. And he says, look here, he tweets PPI, minus 0.1% on producer price inflation this month, and PPI core minus 0.1 as proof there's no inflation. Well, it's producer price inflation, first of all. And this has all got to do with showing you the numbers that support the recession. After having denied the recession for 6 months and a year, for which none of these people were calling it a recession, whilst we were, and saying the labor numbers are lie. Now they're all on our side calling the recession and saying there can't be any inflation. They can't coexist on a sustained basis. Well, when your debt markets fall 55%, as that TLT does, and the result is your dollar is now crashing as hard as it does, every dollar that an American holds has lost value, and that New York strip bone goes from $10.99 to $15.99, which is a 45% increase, and over 16 months, it's an annualized 34% increase, as with the Walmart slip over 5 years. This is all increased cost. You're being squeezed by the cost of living going up, the wages lagging that going up, the debasement of the currency forcing that cost of living going up, whilst at the ceiling level coming down as the floor comes up. You are the locust getting squeezed by your control structure, friends, that gave you the Greenspan Goldilocks economy, where everyone became mass affluent because assets went up and prices actually stayed incredibly level and flat with very low inflation. And now you face the corollary, which these others failed to realize. They don't compare the full cycle to the Goldilocks Greenspan, the 6 months of day where there never was an increase meaningfully in till costs, but we had asset price inflation, the stock market boom, the housing market boom, everything boom, art boom, fancy cars boom. You now pay $500,000 for a 4x4 Ferrari, a sports car. All of these things boom, 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 when 100 grand used to be enough for the same projects about 10 years ago. That's where we are. And now we were going to get a lot of inflation denialists. It coexists. It's brought about by the dollar debasement. The minute you're issuing that amount of debt, you are proliferating. And when you proliferate debt fiat, remember the Russians, they don't separate the two. You're birthing money at the same time you're birthing a debt instrument. Whenever you proliferate debt fiat, you are doing inflationary things. And they will say, well, the net effect is it's too negative a recession and there's none. The two forces exist. Some elements will be cancelled out. The two forces exist. And the bit about what you pay for your steak, your Walmart checkout till, and everything else is not going to get globally dimmed by the dust you've thrown up in the air. You are going to feel that dollar debasement, and you are feeling it, and you have been feeling it way back to the inflation era when we first said, even before the recession, that you're going to absolutely have inflation and you're going to have a debt-based turn given the amount you proliferated along with the inflation. So the inflation came first, in some senses, before the rebound recession post the fundamentals of CV19. Create so much money, throw it into CV19. First the inflation, then the recession. And you have been in that recession, grindingly getting weaker and weaker and weaker. There is no interest rate. We need to cover this discussion. There is no interest rate which is right for these facets. We are actually sitting in a situation where if you are wanting to get through the debasement of debt, the interest rate should be close. It should be a premium on on shadow stats inflation rate, which is well above 10. It's around 12%. You should actually be at inflation bond yields of around 15% to just cut to the kill of deflating that debt becomes an investable asset again. There's too much of it. There's too much more of it to be queued. They're borrowing to pay interest, which means there's even more of it that will now also need interest paying on it. It absolutely is going to end. And no, George, there isn't a shortage of treasuries. And you can say short-term people are looking at it's at the market, and it's because it's recessional that we got a bond yield. Let's have a look at a chart. Let's have a look at a chart. Why not? Let's get that US 10-year up. The US 10-year government bond yields. You see, they say, see, there's no inflation. You see the demand for our treasuries. Look at this. Yield go down, buying bonds. This after a second major miss, the day after. In fact, the day of, on Friday, he posted, everybody wants treasuries. The day directly after, everybody, those people that say the official narrative is nobody wants treasuries. Okay, George, let's get the chart from 2020, shall we? Shall we get the chart from 2020, not just the 4-hour chart or just the bit that goes the day? That's your down leg, friend. That's your down leg with a massive miss and a huge revision. That's how much bonds have strengthened. The yield's gone that much down. So to summarize, that's what you've done to the upside in debt-based devaluation. You've just had the best news to try create a bid in your bonds. You've had the best news. The economy is wrecked. Fear, major revision. Take 1 million jobs out. You can't believe what's happening. Non-farm miss, month later, even bigger non-farm miss. Contraction, recession. All the wise ones, the Lacey's of this world are coming out. It's all been much weaker. We've been lied to. They're turning recessional with a vengeance suddenly. Now that they've got the narrative at their back, they didn't stand alone when they had no news-based media supporting their theory and saying the economy is much weaker than you're told. When it was a recession, it was a recession. There's no reframing for employment. That you've now suddenly found out was a big fucking lie that was being forced down your goddamn throat, as they know. And I tell you, in totalitarian times, the more cornered the liar and fraud is, the more they lie and commit fraud. How can you buy the first version? Let's just go back to our pal, Gigi. How can you buy the first version of a PPI stat when you've just had the labor statistics that's been revised countless times have another million for the tail end of the Biden administration and this all of Trump's administration so far? But the PPI number is going to be right. This is like Lucy and Charlie fucking Brown and the football. You're getting fed shit and you're calling stagflation an L, and you're going, you see, you can't have inflation and you have downside this. Look the PPI number after you've had multiple revisions on the non-farm payroll number and a further million taken out of the books for the umpteenth time. That tells you that even a polite Lacey Hunt is trying not to say was a damn lie. What was the phrase he used? He said preliminary data of all these indicators use monthly payrolls numbers, which so massively overshot any actual employment growth. so massively overshot. How? That's a kind of convenient error. Have you always noticed it? It's kind of like the shopkeeper. They always shortchange you. They never overchange you. How many times do you get overchanged? Oh my God, I gave you too much money. It's kind of like 90% is on the shortchanging side. Have you noticed that? You know, it's kind of like the stats guys. They lied. They lied to favor their narrative. That's how it works. But the PPI is definitely spot on. You see no stagflation. I'm like, but lies, damn lies, and statistics, and you're still going on the data, the data the government gave me. You fucking moron. How does anything they tell you hold any merit when you're so late to the recession, you were so late to the inflation, and now you're all come to stand where we've been standing for 3 years, and you're all revising, and you've changed your views for the recent 5 minutes after suddenly they confess and fess up because they need to do the other thing, like roll some debt. And now we're all buying government statistics on the very next data release that just came out today. I mean, is it just me? I'm just a disagreeable, mean man. Is it just me, or is it a clusterfuck of stupidity that I see, or am I completely wrong? Am I completely wrong? Am I just being unreasonable to a nice guy or nice people? They're all nice people. It's not about the personalities and the people. How does the logic work? Is it just me? I need to ask you guys, because I'm actually thinking I'm living in a parallel universe. The guard, that's the warden, that's continued to lie to me. He's told me I'm being released tomorrow. And I'm so happy. I'm getting out of jail. You know, it's like, help me here. Help me. I have to see the comments. Am I the only one with some sanity here? We were contracting. We hit the criteria of a recession. That's it. That's all. There is no if and but about anything. He stabbed her on the train. She was undefended and murdered her. It's not. There was sadness in his life, you know. There's a lot of hurt there for him. No, it's murder. It's murder. It's like a recession. You met the criteria. It's murder. Premeditated, unadulterated, complete savagery. It's a lie. That's it. Some things are clear cut. Some things are clear cut to me, and I must be wrong. I must have the wrong framing. So the good gentlemen here are all revising. With the labor markets as weak as now indicated, as we told you before, is it reasonable to question whether the corporate profits are as robust as currently believed? They're not. They were based on government contracts that have all been put on debt. That's all. Oh, next pet project. I've got to do this. Tariffs are winning 30 billion in revenues. But hold on a minute. You already, before the tariffs came in, had 7 billion in revenues. Tariffs are winning. A net new gain because of Trump's policy, 23 billion. Okay, now do the debt over the same last 30 days. 550 billion. Okay, let's try the number again. 550 billion in 30 days. 550 billion. So 2 months at the same rate. 1.1 trillion in 2 months. 100 billion of which went on the 4-week, because cheap. I can afford the interest. By the way, as the name says, in less than a month, I'm coming back to be paid off in full or rolled. Happy days. But the short end is controlled by the Fed, they tell you. George will tell you the short end is controlled by the Fed. Well, when you stop putting all your debt out on 30 years because it's too expensive, you stop putting it out on 20 and 10 years because it's too expensive, and you move it all down to the short end, watch how long they keep control over that little hamster wheel that suddenly starts spinning. The hamster gets roasted and comes out like a fried baby piglet. It's turning around so goddamn fast. The corporate profits are only being shored up by status contracts by the Mag 7. NVIDIA is literally a running fraud. And you've got strategy as a Ponzi scheme to enjoy. Watch that be the FTX of the stock market. It's unbelievable. 500, by the way, the 23 billion net gain that Trump's brought in. We're bringing in billions. I just want to tell you, we've been negotiating hard, and it's time that people paid, and we made 23 billion. How much did you put out on your credit card? 550. So let's just get this. New income, 23. New spending, 500. What percentage is that? 4.16%. Your new income for your job is going to cost your living standards. It will pay 4.16% of your living standards. That's the policy. Bravo! Winners! Winners here, winning. We are winning. We'll stick to the plan, Tom. Chew the cigar, bend that goat over, slip it in, have a nice time. Stick to the plan. Stick to the plan. Trump is on the team. You voted right. He's added $500 billion, over $500 billion in a single month. I mean, have you ever? This is winning. This is what winning looks like. I tell you what, I'm going to give you 2,300 in income, and then I'm going to give you 55,000 in cost. How's that work out for you? You happy with that? Are you making more? Are you making your car payment still? Think of all those extra shekels I gave you, and pay that loan and roll it on a 4-week, because you can't 100 billion of it on a 4-week. This is, I mean, it's a parallel universe. Let's listen to Luke, who's sometimes a bit, I find, more sensible than some of the others. US economy reportedly added 911 fewer jobs, correct? We've been banging on about that. Yet in fiscal first half of 25, US employment receipts were up 7%. So you've got an increase. You've got a decrease in jobs, decrease in employment, but you've got an increase in US employment receipts, which seem to be the smoking gun that inflation is running well. Reported official inflation, thinking face, holding chin, assume the Pythagoras position on the toilet and stare at those tiles and realize that the square on the hypotenuse is equal to the sum on the other two sides, and that governments fucking lie about inflation. And Shadow Stats tells you that runs, all it does is take government stats as per 1980 and keep doing the numbers. And you're at double digits. So there he goes. There you have another analyst who I find a bit more sensible, suddenly pointing out, if you're getting less people working and there's much higher job losses than you've been thinking, but due to this withheld and FICA taxes, you're actually going up 7%, increase due to wage and employment growth. No, it's not due to wage and employment growth. It's due to debasement of currency, have to pay more in salaries to your truck driver, your pizza delivery boy, and everybody else from the bottom up. That's inflation. It's inflation. It would seem to be a smoking gun that inflation is running well. It's running well in an environment that you lost 1 million jobs on top of all the previous revisions that were taking it down. So you've been lied to by government. And we've continued to say this, and it's like all the things that needed to be said to confirm that we were right. And I don't want to be right, I just want to make money. I don't care about being right. I've been wrong and made money. I've been right and lost money. I'll take the make money part. So it's no big deal about right or wrong. Can you make money from it? I'm trading HVF method. That's where I make my money. But economically, as a forecaster, we've been ahead of the likes of some of these other names that are now changing their opinions. following the data, trying to get in front of the narrative after it's quite clear what's already been going on, that you were lied to. We told you you were being lied to on the labor number specifically. We called it fake number day. We did everything we said to tell you that no matter what you are hearing through Bloomberg, while everyone was talking up, hot employment market, hot this, hot that, it was all a complete gaslight. You know, it was financial version of CV19. You know that. We need to lock the vaccinated people up. You know, that whole thing. It was the financial version. The data numbers over the last 3 years was an absolute psyop. And I'm telling you, it's going to get worse and worse and worse until the bust. Because that's what empires that are trying to control the narrative and have confused influences still working off the data after the data has been proven to be 100% fraudulent. Now, I'll admit in George's defense, PPI isn't the same data as payrolls. They might have to find a different way to lie to you. They might emphasize something else. But what they do is lie. Of that you can be assured. They are lying, lying, lying. And it is stagflation, because you don't get debt debasement without fiat debasement, and the dollar has debased this year even against other fiats that are debasing. By the way, you do not have an inflationary component. If this is disinflation, another key point, if this is disinflation and it's a contraction and it's shock and fear, you're talking we're 2007-8 rolling into the big downside, waiting for the hit, which to some degree it is for the stock market and many other things, because the consumer, they're suddenly going to go honest. They're suddenly going to go honest on the EPS, on the stock market, and bring the crash, you know, just like they've been holding off lying and they've been taking some of the fat and propping up their financial numbers. This is confession season. It's all coming out. And it's all coming from years back. It's all going to come out. And that will bring, crashes and various other things that I think will be very interesting. But the key thing is this. Did gold go up on subprime? No, it collapsed. It went down. Did it go up on CV19? No, it sold off. Silver went right down to $11. You couldn't buy it for $14 though, but it went right down to a COMEX price in paper of $11. That's what happens in shock and awe disinflationary. That's when you're dominant. You're doing so badly on the recession side that you are killing prices on everything else. What is gold doing right now? What is gold doing right now? Crashing? Going down? No. It does what it does in stagflation times especially well. It's going up, and it's within a few percent of all-time highs, for which we need no excuse to show you the gold chart. So we go down there. This is not a reversal, no matter what anyone will tell you, until you've run that level, 3.585. There's a point where we'll say, okay, the bonds might be getting a bid, some idiots buying them. Well, you might already be in that situation already. They need to create the narrative that there's worthwhile to buy bonds. Why? Who of the international community do you think are buying bonds? Not China, not Russia, not India. And those are some of the places where America has the biggest deficits, China specifically. Not so much Europe, unless you're talking about Belgium, Luxembourg, United Kingdom slave nations, Cayman Isles, basically the CIA spots to keep the Ponzi going. The offshore CIA contagion, keep the Ponzi going places are suddenly big investors. You see, George will tell you there's a bid under bonds. Okay, thank you very much. And did you ask who those nations were? Were they actually for-profit nations or nations that are meant to go down like World Trade 7 when the Twin Towers go down? You see, the hegemon falls from 100 stories. I'm going to change it from 26-step ladder to 100 stories. Britain is going to fall from 42 stories like World Trade 7, and they'll get the timing wrong. They'll be announcing it before it's properly happened, because people will be going, no, not yet. We haven't hit the plunger yet. Hold back. Mossad said not yet. We got to wait for the call from Tel Aviv. Okay, that's where your bonds market is, friends. That's where your bonds market is. You had that candle, that one candle. This is the bid in bonds, folks want treasuries moment. Right there. Let me just put it in a box for you. There you go. Since July, that's everybody wants treasuries day. This was just kind of never mind about that never mind that whole thing when you came from really deep down and you went right up there. Okay, continuation, technical analysis. I'll take George, Lacey, anyone on technical analysis, that I can assure you. Continuation should be suspected as your primary highest probability in key trends. And you have to ask, has this trend trade out of debt debasement? I would suggest no, especially while 550 billion new bonds 1 month. Wow, I'm so glad we got that 23 cents that we can pay against that, and the fact that all the farmers are now going bust in America, and that you're now going to have to import food soon with your weakened dollar, which so won't be inflationary for you at the till. Oh my goodness, these people have completely different framings. Maybe they're right. Tell me where I've got it wrong. Tell me where I've got it wrong. Maybe they're all right and I'm living in a parallel universe. Maybe they're all right. Maybe this is a massive head and shoulders reversal. Bonds are going to be the outperforming. You should watch how the narrative is framed. The bull market for bonds is back. This is what he's hearing. I'm hearing it on the feeds. They need you to believe it. They need someone to believe it. They need dumb money. They need exit liquidity. They need some dumb money. And that's the bid you got. And what's gold done? What's gold done? Let's check on Goldilocks. That thing that normally goes down in big, deep recessions. That's gold. That's gold. That's our HVF. Hey, we're 3/4 of the way to the target we told you to. It seems the funny things we sometimes say have a funny habit of actually happening. As a forecaster, as someone on YouTube, we occasionally, macroeconomics, big picture stuff, all the stuff over the last 3, 4, 5 years, the turn in the bonds back to 2020, the stuff we say happens. It does. No one's going to give it. You all love us. You give us credit. But the other influences, no. You can't have inflation. That's what gold's doing. Does that look like 2009? Let's go have a look at how gold did in subprime time, shall we? Let's go monthly. How did gold do during subprime? Here we go. 2009. This was the top for gold in 08. The top was $1,032. That was the low in the same year of 08. $1,032 to 681. 681. You lost $320. That represents, by the way, about 30+% because you were over in 1,000. 33% drop in a major disinflationary environment. Is that what's happening right now? I ask you, is it what's happening right now? Maybe bad example. Maybe it's a bad example. Let's have a look at something else. What happened in CV19? Now, by the way, we were much deeper in reserve asset substitution, and people learned not to sell the gold. It went down 30% then. How much percent did it go this time in 2020? Let's go have a little look-see. That's what that's for. Let's go 2020. Let's go April. Warp Speed brought to you by Donald J. Trump. Gold was at a high of $1,703. There's actually a measuring tool for this. How about I use that? and fell to 14.55. It went from a 33%, let's say, magic number, 33% crash in subprime to a very short, because it was already in a trending bull, because debt debasement was already a thing. It's just accelerating, and they keep issuing more of it. And we all know Ponzi-onomics, it's going to end. It went from 33% to going 14.79%. 14.79% on the news, then continued once it had retraced it far faster than last time and made a new high into 2021. And as I've shown before, if we go to the yen crisis that came in August of last year, you had in gold barely a 4% sell-off. Now, that was not quite the same. It was disinflationary, carry trade, this and that. There you go. That was July. No, it was this one. Sorry. It was this one. That was your yen crisis right there of August. 4.57. So you fell 33% at one point. Then you fell 14% in a disinflationary environment. And then in a smaller version thereof, you fell 4.5%. And today, compared to that low that you fell to, 2,364, you are now 3,600 plus. What is the price of gold right now? We must know. It's a beautiful thing. Now trading 3,650. So 2,300s, 3,650. So that's $1,300 on top of your 2-3. It's actually more than 50%. That was last year, guys. It was just last year, same time. Last year, you were bottoming in September. You were bottoming in September last year. You went down 4.5%. This is getting more and more stable, lower beta to the downside and higher alpha to the upside. It is what's called an asymmetric trade stroke investment. Gold is an asymmetric investment with low downside, getting lower per crisis. I won't say the yen trade spook of last year, August, was to the same scale as CV19 or the GFC, but it showed, unlike the stock market and Bitcoin that dropped, Bitcoin dropped 30%, by the way. How much did the NASDAQ go down on the same day? Let's go and see. Let's go and see. How much did the NASDAQ go down on the same day, on the same period? Here you go. Gold, 4.5%. 16%. The NASDAQ went down 16% compared to gold. So here you go. You want to buy tech stocks or you want to buy gold? The bad news, you're going to lose 15% and 4.5 on gold. The good news, you're going to go up more on gold than you will on the NASDAQ. Do you understand asymmetry of positioning? The greater one with rewards and the lower downside by risk. Can you see it? Can you feel it? Can you see it and can you feel it? Do not be misled. The economic environment is currency debasement, debt debasement, recession for the consumer and retail and job market in real terms, but nominal values can go up, which is why Luke was highlighting that there's clear inflation. Given that the number of jobs were lower, how did you get an increase? Nominally, the number higher. Nominally, the number is higher. That is what we're talking about. Okay, let's have a look what else we can talk to you about. By the way, don't forget, you too can come and get the correct framing for the economic environment, plus the correct positioning, which is generally very clear-cut, dominant, a reserve asset right now. These people spend so much time throwing out and repeating and calling L's for the stagflationary guys on a PPI number given to you by a known liar, instead of telling you there's one key core theme you need to understand. Debt and fiat debasement is turbo juice for gold. Hear me now, look into these eyes. I'm going to deliver a truth. There's no lenses, there's nothing between me and you. Debt and fiat debasement is complete and utter turbo juice for gold. If you're in a disinflationary, only fear environment without debt and reserve asset debasement, gold wouldn't be going up the way it is. These people, many of them here, don't understand gold. I believe Luke certainly does. I expect Lacey does. But they don't understand that the main story is gold. The main story is debt and fiat debasement, not a current PPI number and what the 10 years done just after a major data shock for the many, not for us, on labor. It's not important that the 10-year actually got a bid. Believe you me, it's never going to get the bid it once got, because it's debt debasement. Repeat this to yourself every night while brushing your teeth, like this. You won't be fooled by the BSs. You need a bit of repetition to hammer logic into your head. It's a debt debasement, debt and fiat debasement time. The 100-story building that is America is in a controlled demolition. The United Kingdom is falling from a 42-story building. Also got lots of folders that nobody really wants them to ever get to see the light of day. But the other nations don't have to fall as far and are in smaller buildings that are potentially maybe not even going to have the full demolition. That is why you need to leave the West. That is why you must own gold. That is why everything else about a PPI number print in a single month from a known liar is actually not that important. The trend and the direction and the framing for the economy is failure, explosion, complete collapse, huge amount of social rest. Why do you think you're getting so much attention to race killings? They want you divided, they want you conquered, they want you focusing on the social, they want a whole bunch of everything else. They want you everywhere else except where you're looking and where you should be looking. You should be buying gold and silver. You should be making plans to escape tax scavenge mode. Tax scavenge mode. I'm going to call it SCAT because it's scavenge for tax and it's perverted and involves a bunch of shit as well. They are going into tax scavenge mode. They're going to get more draconian. Tariffs is about the friendliest tax that Americans are going to face. It gets into deeper, darker taxes on wealth taxes, capital gains, and everything else. They do not have the money. Tariffs have brought in 23 billion over the last 30 days in net on what you had before, which was 7. A net new 23 billion, which is 4.1% of the 550 billion you spent over the same time. That, in one phrase, is debt and fiat-based collapse. All expenditure which cannot be paid, that is being added at an accelerated rate, they will make it your problem. They've used inflation to tax you on the sly. I want to show you some of these other quotes so that you understand that. They've used inflation to tax you on the sly. They truly, truly have. And what's going to happen and what's going to change is the following. They can't use the debt markets anymore to the same degree to issue debt. They're already chock-a-block full. Rollovers are going to be absolutely huge and ongoing perpetually because they're shortening the duration. All of that is going to happen. What they're going to have to do, instead of stealing you from you over the last 30 decades, 30 years, 3, 4, 5 decades, or ever since the Fed existed in truth, but in an accelerated fashion recently, utilizing fiat-based proliferation, instead of stealing from you in that way, which is by slyness, overspending to income, They now have to be more overt and in your face about the fact that they can't spend any more on the overdraft because the debt market turned in 2020. It's a turn. That's what George doesn't get. The debt instrument market is not going into a bull market again that will ever meet the lows of 2020. It cannot pull back that far. There's not that much of a buy for it, except from already imploding nations which now have their own debt problem, such as the United Kingdom and Europe in time. So stay on debt-based and fiat-based collapse. Stay on gold and don't believe known liars when they give you stats. You are being squeezed from the floor in terms of cost of living increases, and you're being squeezed from the top down in terms of recession, reduced opportunity, capital starvation from the private businesses in the world, which is mainly small and medium enterprises, the big mega corps and government, the corporate fascists, the oligarchs, the unicorns, all came out of a Californian basement funded by DARPA, dark state, NSA, CIA, Mossad cartel of insiders that have taken your tax money to build a surveillance grid to police you. That's the world. It's a different economy there. Twist the balloon. You don't live in that half of the balloon. You get the recession, they get the wealth and the asset stripping. And how do they asset strip you? With inflation and taxation. A beautiful combination of from the top and from the bottom. And you, my friend, are the locust sandwich about to be consumed. That's where it's at. And you save yourself by clicking the link below and becoming a community member and preparing and getting out of Dodge where it's going to go down. Get out of the 100-story building. It's just bad odds on surviving in that, you know, the severed pillar, the metal cut, so that the building shifts and falls inside its footprint, all that stuff. It's not a good sign. It's not a good sign. Don't hang around. Don't go, I'll find a clean office. I'll have my gun and I'll be on the department where there's no government officials and I'll be just fine. I ain't leaving. I'm going to see this out. Okay then, we did say. We did try warn. And the same goes for UK. You there on the 42nd floor of your own little slightly smaller controlled demolition. We'll all be watching it on TV and we'll be sad that you had to die. We'll be sad that you got assets stripped. We'll be sad that you got squeezed. Deagle stats. Go and have a look. Time to move, time to move, time to move. Time to move away. Get away from them and stay far away from people that are known to be violent. How about that? Okay. What questions have you got for me? Where? Nowhere to hide. Hundreds of places to hide. Go to Bali. Go to Malaysia. Stop worrying about perfection and recognize the building's rigged. It might be the nicest building that you've ever lived in. It's all 5-star. America's 5-star. There's a McDonald's floor and there's a Eaton amazing New York strip steak store. Forget it. It's the building's going up. You need another building. It might be more tatty than the one you're in, but it won't fall over. Sorry. I didn't make this world. I didn't choose it that way. You got to jump. You got to move. People who are kinetic survive. Immigrants succeed. Those are people that are motivated, make changes for real things. You need to be an immigrant. Immigrate someplace nice where they're not mean to whitey boy. Did Buffett biased or lying? Oh, this is something else. So Buffett, that's an interesting story. I want to show you this. That was this part. Tavi made a very interesting point. Don't forget to follow Tavi Costa and Chris McIntosh, super solid, and Luke Groman. You must give them all a follow. They're solid and awesome. This was an interesting point. Global yields rising relative to US. So you see what happens. Why is this? This is just the 1 year that Tavi's shown you. And he's showing you Japan in pink. The US is in white. So what's actually happening? The real interesting point that he's making is that The other debt markets are having to play catch up this year in debasement to the dollar. So by letting the US rates relatively, because they're going up, but they just haven't gone up as quick. And in fact, if you just take this year, they might be slightly down if the high was at the year end. It kills the dollar. That's why you're sitting on the Dixie. And they need the dollar killed because they need to kill the trade deficit with China and Europe. They need to make Europe stuff too expensive and Chinese stuff too expensive so that you buy inferior products made locally and stimulate, buy American. Okay? So that's what they're doing, and the dollar is being run down. It's a weak dollar policy. They talk more about the recession because they are manipulating the rates down and the dollar weaker. It's what they need. They had the information of how weak the economy was a long time ago, but they lied. Now they need to play the other half of the story. Now they're showing you the other side of the ping pong bat, and they're going to keep throwing it out so it looks like it suddenly exploded on you. It was never there, and boom, here it comes. All the data suddenly show. You go from slighting the stats one way, and then you quickly flip and make up for all the lies you told and restate much, much worse. And you can control the rates. Control the rates, control the currency. Manipulated markets by media, by massaging, by lying one way first, then coming back and being super honest and then start lying the other way. And they'll create, oh, the recession's so terrible. Oh, everything's so bad. And you know inflation will be climbing. And you already need to be on the other train. They'll keep you bouncing between the two trains, devaluing you, reducing your cost of, reducing your quality of life by increasing your cost of living. There was another interesting tweet I wanted to show. That was all about this market, and I think I might have clicked away. It was this one. So everybody, the current narrative is retail won and the insider directors were all wrong. You know, they sold the first sell-off that came with the Trump tariff tension. And retail was right. Retail was right. Retail stormed in. Buy the damn dip, buy the damn dip, buy the damn dip. Retail's right. Everyone taking plaudits for saying it's not yet. Retail's right. Retail's right. In dollar, in Swiss franc, they were wrong. They got a 27% loss and they haven't recuperated that. And in gold ounces, they were very, very wrong. But anyway, in nominal terms, we're 7% up on the previous, on just before the fall. Like you should be taking a 27% hit to make 7%. Do the risk-adjusted returns for someone that has drawdowns of 27%. Never mind, everybody's a winner. They were right. They called upside, melt up, yeah, all of that. The insiders have been selling. This is insiders selling and buying. Just get the color. You don't need the numbers. They'll tell you retail has been winning. Not in gold ounces, they haven't. Not in franc, they haven't. But they'll tell you in nominal terms they've been winning. Not according to these guys that have been buying gold. Not according to these heavyweights that are getting out of the stock market. When you need to move money, you can't leave it till the last day. You got to start moving. 198 of the top 200 insider trades were sells. In 2 weeks, it was 398 of 400. That means you had 2 insiders that bought. The wealthiest 0.0001% quietly unload their bags onto the 99.99%. The mom and pop, buy the dip, Robin Hood traders are never going to be the long-term winners in anything. They might be given a little bit of, tiny bit of the final top upside to celebrate, double down, get a loan against the mortgage, and go hard because they're getting positive affirmation for negative behavior. But these guys know better. Unemployment now is rising worldwide. Inflation is creeping back. Someone else that thinks there's stagflation. You know that thing? Unemployment at the same time as inflation. It's called stagflation. That thing that George says is a big L for stagflation. The pressure is building exactly as it did a century ago. A century ago. That sounds like depression stories. The worst damage will fall on stocks and crypto. Both will easily fall to 80% of 90. If we get a big dipper, the insiders will turn retail into bag holders. And the stock market's never been more overvalued. I can't tell you when it'll go unless it's giving a technical thing, but in terms of gold ounces, it's not even interesting to me. I'm not even watching the indices very often. Certain stocks, like mining stocks, well, they might not do so bad at all. In fact, a purple patch, recession for your costs, oil, staff, wages, energy, inflation, stagflation for your product that keeps selling for more. Each year, it's going up 50, 60%. Imagine every product you sold, you're on a hot dog stand and you can sell it for 50% more, your hot dogs each year, and people are going to queue to buy them. Each year, you get to put your price up 50% on your hot dog. Imagine you have that. And the cost of tomato sauce stays flat or even goes down. And Viennas and buns. What's that going to do? Everybody's going to become hot dog stand vendors outside the stock market exchange, outside everywhere. That is where miners are. The purple patch of stagflation is recessionary on their costs and inflationary for the one commodity that always goes up and holds value in inflationary times. And if people are actually underinvested, which they all are, 1 or 2%, home offices, other people, etc., and they suddenly decide 10 or 15% might be better, well, you get what's called the overshoot to the other side. The overshoot to the other side. That's what miners are going to give you. We do HVFs inside our community on the best miners, the best trades. We've shown you an interesting chat with Don Durrett. We continue to track that. We'll trade them on the lower time frame. There's other miners you might not have heard about. Many other things that are going on, plus other stocks that will benefit from the crash. Most of them will be crushed, the consumer stocks, plus gold setups, silver setups, platinum setups with interims, targets, asymmetric rewards to tight risk, asymmetric rewards to tight risk, interim targets where we know and expect to rest. It sometimes gives us an opportunity to scale in. We assume success on a triggering event. How's that worked out for us? Well, the HVF of 2021, let's do it for you. Let's show you gold. Also still on the NASDAQ. We don't want to look at that. We want Goldilocks. Goldilocks is our friend. Bring back Goldilocks and the three bears. The three bears. There was the HVF before. That one had a 50% price move baked into it. I had the risk reward on it. It was eventually getting in the way. You could have bought with us around here, and that target took you to the 3,000, and the risk was as tight as that. Now, if you go look at the legacy YouTubes, you will see risk rewards off the chart. Now, this one doesn't have quite the same risk rewards, but we tightened that stop entry. I've shown you some of the entries. You're still going to see the better part of a move that we expect will run 3,768 to the upside in gold, and could be delivering for you something along the lines of around about 19x risk reward, where every day bar 2 has been a green day. How many green days do you want? You want more metals? You want more gold and silver? Learn HVF method, trade them with us. We are in a continuation realm. Continuation is your friend. Keep on keeping on. This debasement of debt and fiat has barely begun, friends. That means you stay out of debt markets or you short them, and you stay aggressively long only in investment of gold, and you trade to the upside only on HVF structures. You turn the profits into investment, you tax it back down, you take your profits, put it in more bullion, and you scale up and you secure financial wealth for yourself, financial protection for yourself through virtue of having multiple residencies and freedom of movements. We have our friend Carney over here in other political announcements that's saying taxes should just go up exceedingly high on those that travel. If you're wealthy, you're going to be able to travel. If you're not, you're going to stay put. You're going to stay damn well where you are. Eventually, the music stops. And whatever chair you manage to grab, if you manage to grab one, is the chair you will sit on till death do you part, unless you have secured your wealth, unless you still have the ability to travel, unless we should be taking into account the impact of our flying on the planet, says this watermelon communist of legacy family. You push up the tax on flying, you push up the cost on transport, and that's in part what putting a price on carbon. Isn't it funny how the cure for everything is tax, especially in debt, fiat, debasement times? The cure is tax. Scavenge for taxes. It's shit and it's perverted, and it's coming to you soon. There you go. I'm Francis, the Market Sniper. I'm here to help you through reset times. I want to help make you wealthier. I want to help protect your wealth more. I want to give you optionality in freedom in a world where the West is going to be right-sized by living standards for putting all its debt and IOUs out for everybody that made it real products. There's payment day. It's coming soon. It's a controlled demolition. You're still in the building. It's time to get out. Otherwise, you will free fall 100 stories with concrete blocks and nano particles that have imploded alongside the metal beams, hovering down with you. You will be roasted and collapsed. Don't do it. I would like you to live. I would like you to live. Sometimes you just have to leave. You can refine the destination later. Just don't be in the frying pan or the fire. Till next time, I will catch you then. Thanks for watching. Thanks for joining us. We're an entertainment time channel. We are not regulated. All digs at people are kind of just for fun. They're all good souls. Some are just stupider than others. And we, of course, think we're the smartest, where invariably we're quite probably very, very wrong. Until next time, catch you later. Bye-bye.